Welcome to the InterMarket Analysis Update. This is being prepared for Monday, May 22nd. What we like to do in this video is just go through some other markets, not only inside the stock market, but we also look at other markets outside of the stock market to try to get some insight as to what's happening in the stock market in general, and then the S&P 500 in particular. The first thing we look at is valuation. What we do is we look at the trailing 12 months and compare it over a period of time to historically try to figure out, are we expensive, are we fairly valued, or are we inexpensive? This first chart that you see gives a PE ratio of 20. When we're at 20 or above, the market is considered to be expensive. When we're between 11 and 19, or 15 is the midway point, that's considered fairly valued. And when we're at 10 or below, the market is considered inexpensive or cheap. We plot all three of these different colored lines here on the chart. The red is the PE ratio of 20, the blue is 15, and the PE ratio of 10 is green. And then we compare that to the current price of the S&P 500. On a historical basis, the black line is above the red line, so the market is considered expensive. Down below, this is a spread between the black line and the red line to show when we're above zero, that means that we are expensive. Another way to look at this is over a period of time. I've highlighted some different historical events, and you can compare what the trailing 12 months look like on a historical basis. We also look at a thing called the Shiller PE ratio, also called the CAPE. This is suggesting that the market is also expensive. We have a current reading of 29.38, where the median and the mean over a period of time are between 16 and 17. We also then look forward. That's what the stock market does. They don't look back, they look ahead as to what's happening, and we come up with a forward-looking PE ratio. After Friday, the current PE ratio for the S&P 500 looking forward is 18.3. It's a little bit under 20, but it is above 15. We also look at this for the mid-caps, where as of Friday, that forward-looking PE ratio was 13.1, and small caps, which have had some trouble lately, their current forward-looking PE ratio is 12.8. We also look at growth versus value, and I have some new charts that I haven't shown before. This is a pure growth index, showing that we are still in an overall downtrend. We've been trying to make a comeback, especially compared to value, the other side of this equation, but it hasn't quite turned positive yet. Here is the value index, which also has been showing a downtrend. Then we look at growth versus value on the top and value versus growth on the bottom. For most of 2022, growth was underperforming, value was outperforming. We're starting to see a potential shift now as growth is showing some strength and value shows some weakness. We look at a number of different indexes and ETFs. This is an ETF comparing growth to value, where growth had been doing really well. In 2022, it really underperformed, but now it's trying to turn back up, but we're not positive yet. We look at an inverse of that same chart showing how value had been underperforming. Then in 2022, value outperformed, but now it's starting to show some weakness. We look at some indexes where growth has been underperforming, but we're starting to see a golden cross here with this particular index. That's why we look at a number of different growth to value ratios. But then when we look at the value to growth ratio, this hasn't crossed over to give us a death cross yet, but it does show the value is starting to underperform. And then we also look at another index, growth versus value, showing how growth had been underperforming, but now it's starting to show some improvement, but not enough to give us a golden cross, at least yet. Another thing that we've been watching is small caps are really running into some trouble. This is a daily chart up on the top. Since the beginning of February, small caps have really been under pressure. But if you look inside of the small cap index and you compare small cap growth to small cap value, we are actually showing some strength here. So this shows internally that some buying is going on by the smart money that we need to be aware of. So we want to see this ratio continue to show improvement. We're seeing the same thing in the mid-caps. The mid-caps have also been under a lot of pressure, but you can see the ratio between growth versus value is showing a lot of internal strength. We also look at growth versus value, which growth had really been underperforming, and now it's starting to really improve here. And then an inverse of that same chart showing how value had been doing quite well, but now it's starting to underperform. And then we look at the S&P 500 and we compare growth versus value. We do this in some other charts, but this chart is designed to be longer term to give us a better perspective. And yeah, we have up times and down times, but for the most part, growth is starting to outperform value. We also look at inflation. On the top is the CRB index. This is a monthly chart showing how the CRB index has been coming down. That should help lessen some of the inflation pressures. We're also seeing that down below by looking at an inflation-deflationary ratio, and that continues to drop as well. We also look at the Baltic Dry Index. How much does it cost to ship products from one place to another? When we see inflationary pressures, this price is going up, but now we're seeing more deflationary pressures. And then we look at the CRB index itself, and when they're going down, that's more deflationary. Some other markets that we look at, aluminum, just to see how it's been coming down. Corn has also been dropping. Wheat has been coming down. We look at fertilizer, which also continues to drop. Heating oil, which is coming down but bounced back up recently. Gas, which is chopping around a little bit. Natural gas, which is coming back up after it really declined. Oil, which has been right around the 70 or a little bit above level. And diesel, which also continues to decline. Lumber, which is also in an overall decline. Copper, which is still in an uptrend, but starting to show some weakness. We call this Dr. Copper. When copper's going up, that generally means better economic times ahead. When copper starts to go down, just the inverse of that is usually considered true. Gold continues to be in an overall uptrend, even though it has been falling back lately. And here's a copper to gold ratio showing how copper is really underperforming gold. This is longer term, and we also compare this to a 2-year yield. And the spread between these two is quite wide. In a good, solid environment, they have a tendency to go in the same direction and not get too far apart from each other. On the top, you have gold. On the bottom, you have silver, showing that there's a very strong correlation between the two. Silver is also in an overall uptrend. And then we have the gold to silver ETF ratio. On the top, when this is going down, that means that silver is outperforming. When this ratio is going up, that means gold is outperforming. And a general observation that was made, when the US dollar index goes up, gold outperforms silver. When the US index generally is going down, silver outperforms gold. Now they both could be going up. It's just which one is going up faster on a relative basis. When we saw gold really outperforming, the dollar was doing quite well. When we saw some weakness, that's when silver started to do a little bit better. We're seeing some strength in the dollar as of late, and we'll have to see if this relationship ends up switching at all. The dollar index, after coming down, is still in an overall downtrend, but is trying to bounce back up. The euro has been going up against the dollar, even though lately it's been coming back down. And we also have the Japanese yen, which has shown some recent weakness, and the euro recent weakness as the dollar's been trying to bounce back up. The Japanese yen is still in an overall uptrend compared to the dollar, and the British pound is also in an overall uptrend. Looking at some different indexes, the CRB index compared to the S&P 500 shows that the CRB is underperforming the S&P, where the S&P is outperforming the CRB index. The NASDAQ 100 continues to outperform the S&P 500. These are the growth stocks. These are the big tech names. We saw a recent golden cross here, and this is showing a lot of improvement. But equal weight stocks are underperforming the S&P 500. The S&P 100, which are the bigger stocks, are outperforming the rest of the stocks in the S&P 500. The small caps are underperforming the S&P 500. The NASDAQ is still doing quite well compared to the S&P 500 and is in an overall uptrend with this ratio. We also look at the NASDAQ 100, and also the NASDAQ is doing good, but the NASDAQ 100 is doing even better. Looking at some other stocks, we look at the NYSE advanced decline line. I show this in the daily videos where we're coming back down a little bit after Friday with the NYSE. We're still holding up, but we declined a little bit with the S&P. We're coming back down to the moving average with the mid caps, and we're still showing some weakness overall in the small caps. The biggest software companies in the US are continuing to be in an overall uptrend. The mega cap growth, this is where we're getting a lot of the strength from these days in the market, and that is in an uptrend. When you compare mega cap growth with the equal weight index, the mega caps are just really going up strong. The Dow Jones Composite Average is pretty much been chopping sideways. This takes the Dow, the transports, and the utilities together. It is in an uptrend, but we're in danger of having a death cross here if this average continues to show some weakness. The low volatility stocks, those were the better places to be in 2022. Now they're starting to come under a bit of pressure, even though they're still in an overall uptrend. When we compare the low volatility stocks to the S&P, though, they are underperforming. Looking at Dow theory, where we almost came back up with the Dow to reach previous highs, we're seeing a real negative divergence here with the transports. We didn't really see a negative divergence here with the utilities, but lately the utilities have been showing some recent weakness. The FANG stocks continue to do quite well, even though they were down in Friday's session. ARK, though, still continues to be in an overall downtrend. This is a new take on Dow theory, where we use the S&P in replace of the Dow. It shows that the S&P is breaking out, but we're hitting pretty significant resistance at 4,200. We compare that to a broader market measure using the NASDAQ, where it is also breaking out. So these are confirming each other at this point. When we look at the S&P and compare it to stocks in Europe, Australia, Asia, and the Far East, we're starting to turn back up after coming down to this moving average, but the PPO on the bottom continues to decline. It could be bottoming out and getting ready to turn back up, but it hasn't done that yet. Looking at bonds against stocks, bonds still continue to be in an uptrend. World bonds are also in an uptrend, but they've been really choppy lately. Stocks continue to outperform bonds, and bonds are underperforming stocks. Where we look at high yield corporate bonds, another name for this is junk bonds. They continue to be in an uptrend, and investment grade bonds are also in an uptrend. Look at the stock to bond correlation. They're having a pretty strong tendency now to go in opposite directions from each other. The Dow Jones Corporate Bond Index is still in an overall uptrend, but it's showing some weakness and chopping sideways. The 10-year yield is starting to go back up. Here's another look at the 10-year yield. We also look at the 10-year yield on this chart, showing we're above the RSI, so the rate is starting to go back up overall, and the MACD is also positive and above zero. The S&P was underperforming the rise in interest rates, but then we saw a recent golden cross here, but now this relationship has been weakening lately. The 30-year yield is also starting to go back up. Junk bonds continue to be positive overall, and then we compare that with treasury bonds, safer bonds, where junk bonds are outperforming government bonds. We look at the 10-year ETF based on price, where it is starting to show some weakness. We've dropped below the RSI, and the MACD has also turned negative. And then we look at the different maturities for yields, showing that overall interest rates have been going back up. Then internationally, we look at the US, the UK, and Germany, and they're starting to turn back up with their rates. Japan is its own little story that we're keeping an eye on, and their interest rates still remain low. Then looking at the 5-year yield and how it's been performing, starting to show some weakness here, and the special K is showing that we're going into a downtrend, but on the very bottom, the KST is starting to turn back positive. We also look at the 5-year yield in the short, intermediate, and long term. The short term is starting to turn back positive, intermediate term is declining, and long term is declining. Then looking at the long-term bond ETF, short term showing weakness, rolling over in the intermediate term, still positive in the long term. Then we compare the bond price with the CRB index, and bonds are starting to outperform the CRB. Then here is the MOVE index, which measures the volatility of bonds. It's not really giving us an extreme reading right now. On the bottom is the VIX, which measures volatility of stocks, and we can see there's a really strong correlation between the two. The different sectors, this is one we're really keeping an eye on in the daily videos. The S&P has been really underperforming utilities. Utilities are also showing some weakness. When this really goes up, meaning the S&P is outperforming utilities, we get some really strong upward movement in the S&P itself. When it's topped out and going down, that's usually when we see some weakness in the S&P. It has been showing some improvement here, so we're going to watch this to see if it keeps improving. The staples sector, which was better in 2022, is still in an overall uptrend, but showing some recent weakness. The tech sector, which crossed positive a number of months back, is still continuing to look strong, and the semiconductors continue to look strong. When you compare the tech sector to the S&P, the tech sector is outperforming. Energy, which had been really doing well in 2022, is now starting to underperform the S&P. And then we look at the communication sector compared to the S&P. It's still going up. The energy sector is now going down. Discretionary has been pretty much chopping sideways. Materials are starting to go into a downtrend. The financials, with all this banking news that's coming out, continue to be in a downtrend. Real estate is also in a downtrend. Utilities are in a downtrend. Healthcare is also in a downtrend. And here's another look at healthcare, showing how there is some weakness coming through. Staples just crossed over positive with the ratio, but now are starting to fall back down. Industrials could be getting ready for a death cross in this ratio. When we compare growth to treasury bonds, it shows that growth stocks are outperforming the rise in bonds. Energy to the tech sector shows that energy is now underperforming tech, and the tech sector is starting to outperform the rise in interest rates. And then this is an inverse of that, showing how the 10-year treasury yield is in a downtrend compared to the tech sector. Discretionary is still in an overall downtrend compared to staples, but it is showing some improvement. And then this is an inverse showing how staples are still in an overall uptrend, but could be showing some weakness. Gold to the S&P shows that gold is outperforming. Gold is also outperforming the dollar. And high leverage loans. These are risky loans. If we were getting ready to fall off a cliff, would this index be as strong as it is? Probably not. Looking at our InterMarket Analysis chart, we go back to the beginning of 2022 where oil is still in the lead, followed by the dollar, and then gold, where stocks and bonds continue to be negative. Small caps continue to underperform large caps, and the NYSE is still in an overall uptrend, but showing some recent weakness, where the Wilshire is looking a little stronger. All stocks also continue to be in an overall uptrend. Emerging markets, chopping sideways a lot, but still in an uptrend. If we see some weakness here, we may get a death cross. Bitcoin is still in an overall uptrend. After it got up into the 30s, has now been dropping back down. And then internationally, China's starting to show some recovery. Emerging markets are flat right now. Europe is starting to show a little bit of improvement, where in Japan, they're in a downtrend and the US is still in a downtrend overall. It takes a long time for this indicator to switch. Some correlations. Comparing the dollar to the S&P 500, they're having a pretty strong tendency to go in the same direction. Comparing the S&P to oil, they're pretty much neutral in their relationship. Comparing the 10-year yield to the S&P, they're going in the same general direction. And the tech sector to the 10-year yield also in the same direction. Comparing the S&P to the 2-year yield, same direction. And then looking at the home builders study that we have here, the S&P has been going sideways and breaking out. The home builders ETF has been doing quite well. The ratio has been holding up even though it came down on Friday. The relationship is not as strong as it usually is, but they do have a pretty strong tendency to go in the same direction. Looking at some long-term secular and cyclical studies. This is the NYSE monthly chart showing how the Copic curve is now starting to go back positive. Also, the NYSE record high percent index is overall positive. The S&P is positive when looking at the PPO. And the S&P is also outperforming the CRB index. Then we look at the S&P and compare it to a global index where it's still in an overall downtrend on the bottom, but up on top, we're still above this moving average. So what are the things that are positive as of right now? We have anything that's positive is when the 50-period simple moving average is above the 200-day simple moving average. Dynamic software, those are the 30 biggest companies, which remains positive. The euro, the Japanese yen, and the British pound when you compare it to the dollar. Copper still showing some weakness, but in an uptrend. Gold and silver are in uptrends. The mega caps, the S&P low volatility ETF, the Dow Jones Composite Average, which is chopping sideways, but still in an uptrend. The FANG Index, bonds, when we look at all the different kinds of bonds, the ETF, the high yield, the investment grade, the world bonds, the corporate bonds, and the junk bonds. Staples are still positive. Tech and semiconductors, high leverage loans, the Dow, the NASDAQ and NASDAQ 100, the NYSE Composite, and the Wilshire, all stocks, emerging markets, and then we have Bitcoin. You'll notice that I didn't go through individual charts of the Dow, mid caps, small caps. I do that in the daily videos. Then what's negative right now? Anything where the 50-period moving average is below the 200-day moving average. Growth indexes and ETFs are still negative overall. Value indexes have also dropped to negative. Now growth is starting to outperform value just slightly. The CRB index, the dollar index, ARK, microcaps, small caps, and mid caps continue to be negative. So thank you. I hope you found this helpful. Please feel free to check out my videos that I post every day. I also have a weekly video, and after this I will be preparing what's called a deep dive video where I go through some of the charts that I didn't cover in any of the daily videos this week just to see if we can get some extra insight from them. So have a great weekend, and I will talk to you in the next video.